Hey everyone, welcome to Live Trading Thursday. My name is David. I'm excited to be with you today. We've got some really crazy stuff happening in the market. We're going to be looking at that. We're also going to be looking at your tickers that you bring to the table because I'd love to analyze some trades with you, take a look at the trades that you're wanting to get into or considering, maybe trades that you are in, or even historical trades. Let's look at all of it. Let's analyze it together in this next 15-20 minutes or so. And I also want to bring a trade that we actually entered last week. We did a paper trade on it just for fun to take a look at it. And so we can take a look at that together and see how is that trade holding up. So it's going to be a fun time here. I want to remind everyone that all these examples that we're looking at in this live trading session should be viewed for educational purposes only and not taken as trading or investment advice. So once again, go ahead and get your tickers or the stocks you want to look at in the comment box down there. Both YouTube and Facebook should have those, so feel free to take a look there and throw those in there. Let me share my screen and let's break down what's happening in the market here. Let's get a quick refresh. Big day here. So we had a gap down. We were looking at, we made lower lows and then came back down to those lows just below 3,600. Big gap down today. And for a second, the market raced down, even clipped below 3,500, and now has been up big. Rushed all the way up to the 10 EMA, has fallen down a little bit. So we'll kind of have to see if that 10 EMA holds to be, a longer term resistance, or is that just kind of for today? And so that'll be interesting, because if it's just for today, then we might start pushing back down tomorrow again and the next week, and potentially even making lower lows from there. But if we do break that 10-day, we could be moving up to this line. The 20-day was resistance last time. Who knows? We could be moving all the way back up to the 200 at some point here, and then coming back down again. That's also a possibility. So there's a whole lot of things that could happen, and it's just our job not to necessarily predict the future, but just to see what is the market doing and get in line with what the market is doing. So easier said than done, but we're going to look at a few things. Hey, Jeffrey, glad to see that you're on today. Jeffrey says, off topic, how likely percentage-wise do you guess the dollars will reset before this time next year? Jeffrey, I'm not sure I'm understanding the question exactly. How likely do you guess that the price will reset before? I don't know if I'm understanding the question, but I can tell you that if we're thinking about, how likely is this or that going to happen, there really is no, I'm going to say a 40% chance that the S&P is at this price. Okay, you're talking about currency value change. Well, again, when we're talking about predictions for the future, I like to stay away from it. So I know you're not going to like this answer, Jeffrey, but I think this is still a valid answer. No matter what it is, what instrument you're looking at, whether you're looking at stocks, options, or currency or anything, if we're trying to think about the future and be like, oh, I'm predicting it's going to do this or do that, how valuable is that really? This is why we say we're going to trade with the trend. We're going to look at what is it doing, and then we're going to trade with that. Right now, you can see we are in a downtrend. This is downtrending. We have a high, a low, a lower high, lower low, lower high. Ooh, I kept going. Lower low, lower high. You've made a lower low again. So what am I looking to do? I'm looking to trade a downtrend, which means today's candle is fantastic. You ask why? It's going up. Yeah, which means it's going back up to a good buy point or sell point, however you want to look at that, But I mean, if you want to trade put options, you could buy those put options. So I wouldn't mind if it goes up again tomorrow. Yeah, let's push up to that 20 EMA, somewhere right along this downtrending resistance line. And then let's fall down off of that and let's do something with that, right? That's what I'm hoping for. That's not what I'm predicting. I want to make the chart show me first. The chart's going to show me what it's doing, and then I'm going to get in line. We have that saying, when dancing with the gorilla or the elephant, pick your scary animal, which elephants don't seem scary, but they are one of the deadliest animals in the world. So beware. Whichever animal you're dancing with, when you're dancing with that animal, You need to let the animal lead, let the gorilla lead, let the elephant lead, and you just follow. We don't want to try and push that animal around because we're going to lose. In this case, we're dancing with a bear, right? It's a bear market. So there you go. That's kind of my long-winded answer, but it's a good question, Jeffrey, and it opens up, a very good coaching opportunity and moment right there as well, because we can really hurt ourselves a lot when we think, oh, surely this is going to happen. Surely that's going to happen. Or I predict this, or I predict that. That can get challenging. All right, let's dive in here. A couple things I forgot to mention. Well, why are we down so much here? Well, bad inflation numbers again. And so that's kind of the name of the game. Inflation. That's just been happening. And so the Fed's saying, well, we've got to curb this. We got to raise interest rates, or raise interest rates. We get punched down again. Another thing to note, this week starts earnings season. So we're going to go ahead and be cautious of that when we're looking at potential trades, because earnings is right around the corner. Jeffrey says, don't forget that bear spray. Yeah, you're so right. Don't forget the bear spray. And be sure to spray it on the bear, not on yourself. So it's not like mosquito spray. It works a little differently. All right, let's go ahead and while we wait for some tickers, again, guys, throw those tickers in the comment box because we'd love to look at those. Jeffrey, I'm expecting at least one ticker out of you today. Just had to call you out there. But while we're waiting, let's look at LNG, okay? We looked at this one, and it was a fun one to look at last week. And we actually structured a bear call debit spread just for fun. Now, keep in mind, earnings again, November 3rd, so that's in a few weeks here. So our trade that we structured, we can only do out to an expiration of next week, Friday. And we sold the 180 by 185 credit spread. How are we looking in this trade? Well, our resistance line, and this line might not be, that might have gotten moved. There we go. That should be where that line is. It's looking a little bit better. We got in on this day. Now, remember, we jumped the gun on this, right? Because I just wanted to show the example, but we never waited for that buy point. The buy point actually came the next day on this Friday when it fell down off of that line. That was like, yes, jump in. Now, you don't like to see after you jump in that it went back up again. Obviously, that's not what you want to see, but it's still near resistance. You do have a little bit of a wick right there, so maybe it won't go higher than that. This is still one that we would have to watch carefully, but we do have the advantage of having some cushion with that credit spread. If this were a straight option, it would, if we were doing a straight put on this, it would be a bit more emotional. It'd be a little more challenging right now. But with the credit spread, since we have that cushion, we can relax. Okay, we can relax. So let's take a look and see actually in our positions right here and make sure, yep, Tradeaway Paper Trading, that's the correct account. And this is it right here, LNG. So that's showing the day. Okay, here's the game. We are down $40 right now, so not too much, and it is up just a little bit from where we had bought it, or I'm sorry, where we had entered the trade. But even if we just move straight sideways from here, you're going to see that value starting to drop off pretty quickly, which means we can buy it back for a bit more of. Actually, we can buy it back for less, which means we make a profit. So that's great. Now, if I had followed this trade throughout the week more closely, we could have been in a position to buy it back and make a profit on Monday. So, or Friday even, if we got in and the very next day it came down there, we could have gotten out with a profit that day. Now, I've let it go a little bit here, so I want to look at this with you guys today. So here we are, and we'll just have to see. Maybe we'll pull this one up again next week. That would be fun to look at again next week, day before expiration. But it's pretty close to break even there. It's showing a little bit of an expense, but not much right there. So you can see that all the information there. All right, awesome. We've got some tickers. Thanks, Jeffrey. I knew you'd come through. All right, we're going to look at M to start things off. Let's take a look. Macy's. All right. Macy's. Let's zoom out here. Overall, the charts, looking kind of rough, right? Let's go big. I got this big line here. What is that from? Okay, got some wicks here, so some resistance. It was some support, some resistance there, but we've got plenty of room from that line. Earnings is still a ways away, about a month out, so we've got time there. Now, here's another line I want to draw. We're going to look at something like this. Now, Jeffrey just threw out the ticker, right? He's not saying, hey, let's get bullish or let's get whatever. So let's just look at this like clean slate. And what can we do? We put this line on here, this downtrending resistance line. And I'm looking at this. I'm like, ooh, okay, this is getting really close to that line again. And the last 3 times on that line, it fell down. And we know stocks oftentimes like to fall down pretty quickly or faster than when they go up. Maybe it's gravity. I don't know. But so if we are coming up on this line here, if we start to fail at that line, there could be opportunities for a bearish play to the downside. And usually those trades are only going to last a few days. So earnings being a month out, plenty of time. So I like this one, Jeffrey, that you pulled up here. It's not ready yet. I wouldn't jump into a put or any bearish trade on this yet, but potentially even tomorrow. If this thing closes where it is now, and then tomorrow it opens up at that line and starts coming down, that could be an opportunity. Jeffrey says, would you wait on M till it comes back up to the 21 or so? I don't have up to the 21. It's above the 20 EMA. The 21 is going to be very similar to this white 20 EMA right here. So I'm not sure what you mean by the 21, but this, regardless, I would wait until this guy falls off. I wouldn't get bullish on this, right? For me to get bullish on this stock, we've got to break this downtrending resistance line pretty nicely. Come back, put in another bounce as we're starting to form an uptrend. And then I could look at a small bullish trade up until about this line right here. About the $21 area. At that point, I'm wanting to get out and see what does it do. Is it going to fail or is it going to break through that as well? So, $21 line. Yeah. This guy right here. But yeah, okay. I'm on the same page with you now. I thought you were talking EMAs. So we are looking at, if we're going to get bullish, I want to see this downtrending resistance line broken. And I want to see a bounce, a good buy point, and we can look at that up to the 21. Now, even if it's at 20 and it moves to 21, that's a 5% move. That's solid, right? Simple stock trade. You could do that. You could trade a credit spread on that, make 15% or so. You could do a debit spread on that and make potentially 100%. So even though only a 5% stock move, that can still, you can work with that. You can do a lot with that. So that's good. But before we think bullish on this, let's see what this does now, because there could be a sooner bearish trade setting up nicely here. So that's great. All right, Jeffrey's also got Boeing. Let's take a look at Boeing. Let's see what we got here. Whoops. Okay. Boeing was looking really nice for a while. Started to fall down. Keep in mind, earnings is just 2 weeks out on this one. So that's something to be aware of. The pattern is not that pretty. The pattern is not that pretty on Boeing. It started to look good. It failed again, and now it's just kind of there. You know what I mean? Now, first rule of thumb, when you look at a chart and you're like, that pattern's just, what is that pattern? It's not a pretty uptrend. It's definitely coming down, but it's not a pretty downtrend. Yeah, I see it's wicked on the 20 EMA 3 times there. It's had some resistance, but it's also made a higher low. It's just kind of, when you can't figure it out pretty quickly, it's probably best to just move on to the next chart, right? Now we'll play with this one a little bit more. But if I'm going to choose a favorite between Macy's and Boeing, it's Macy's all day long, because that's a nice looking pattern that's potentially setting up even as early as tomorrow for a nice put play. So, but Boeing is just kind of not the prettiest pattern right now. Plus, you got earnings in the way. So maybe we could look at something like this. And this might be stretching it, but you know, that line right there, that downtrending resistance line, and we might even find out as soon as tomorrow if this line even makes sense. If we fail off of that and move down, we could potentially be looking at this line. I'd wait for earnings to pass, and then if we can come back up and fail off that line, we could be looking at some bearish trades potentially. So that's what I'm looking at as far as Boeing goes. All right, guys. Well, I know we've got several people watching today, so thank you all for being on today. Jeffrey, thank you for being awesome and throwing several tickers our way and some great questions, comments there. So it was that quick, guys. You know, these live trading Thursdays, they go quick, only 15, 20 minutes. So, you know, that's why we got to get those tickers in quickly so that we've got the opportunity to get through those. So here we go. Let's wrap it up with a look at the overall market one more time. Right where we left it, still got a little bit of a wick off the 10. We'll have to see if that breaks through there or not. And then we'll have to see within this bear if we keep going down or if we start pushing up a little bit there. All right, last thing I want to leave you guys with, as we're talking about a bear, throw in the comment here, we have a free webinar that we are hosting this Saturday, and it's actually called Beware the Bear. And so it's David Mitchell's going to be teaching this himself, and it's going to be all about how do we approach this bear market? How do we keep ourselves safe and our funds? You know, how do we make sure that we don't lose too much capital in this bear market? How can we actually take advantage of the bear and turn this negative experience around into a positive experience for us? So go ahead and check out that link that I just dropped in there. It is a free webinar. I hope you can all attend on Saturday for Beware the Bear. That's going to wrap it up for today. Thank you guys so much. We will see you guys next week.